Here is a more narrow case study looking at an ETF and some of the underlying stocks that compose the ETF. In this case, it will be the retail sector. It is similar to comparing the performance of a stock or an ETF against the broad stock market with an index such as the S&P 500. For this example, the chosen time period is the year 2018. That means from a year-to-date perspective, this ETF rose a maximum of 15% from the first day of trading that year, and the lowest it dropped was about 17%. And for some continuity with the previous case study of broad stock market sectors, this retail sector ETF performed quite well during the same approximate 2020 time period. During that time, the retail sector ETF, ticker symbol XRT, had one of its main holdings in Target stock, ticker symbol TGT. It underwent the same approximate movements in that it rose and went sideways for most of the year and then dropped closer to the end of the year. However, it is a significantly higher uptrend compared to the overall retail sector ETF. And that strong performance is quite reasonable given the longer term context, given that Target stock was already on a prior uptrend and continued that strength into the next 2 years. Then Macy's stock, ticker symbol M, another holding in the retail sector ETF, showed a similar rise towards the middle of the year, followed by the same general drop towards the end of the year. Compared to the last two charts, this is a very strong performance, dropping about the same amount, and then it rises significantly more towards its peak in 2018. But when looking at the longer term context, it does significantly worse than Target and the retail sector represented by the XRT ETF, as it continues the longer term downtrend, providing another example of dynamic movements in the stock market. Then Walmart stock, ticker symbol WMT, another holding in the XRT ETF, demonstrates a distinct difference in that it does not move much for the given time period. It does not rise significantly more or drop significantly more than the other charts. Quite natural given the longer term context of Walmart continuing a longer term uptrend in a relatively stable fashion, going at a slower pace than Target and the broader retail sector, but still on the same overall trajectory. Because the retail sector is more cyclical and seasonal of a business, it tends to produce more frequent upswings and downswings compared to many other sectors in the stock market. So lots of variety can be found when comparing retail stocks to the XRT ETF in general. You can do this very same thing by picking some retail stocks and comparing them to the XRT ETF, or you can pick an entirely different ETF and find some stocks that compose it, and then compare the performance of those stocks to the ETF. And this comparison can be done over the span of 1 year, like this example, or it can be done in a longer time frame from 5 years, 10 years, and so on, or a shorter time span, 6 months or less. The ability to compare ETFs and stocks with their respective sectors and broader stock market indices is very useful in understanding what is normal performance, underperformance, and overperformance of the stock market at any given time. Keeping in mind the lessons here will be of use when further advancing analysis skills of the stock market. Thank you for your time and attention, and all the best in your journey to better understand the stock market.